Welcome back to GLXY Grid. As always, I'm Alex Thorne, head of firm-wide research at Galaxy. We have a great show for you today. Mark Hochstein, Zach Picorni, and Will Owens from Galaxy Research join us. How's it going, guys?
Good morning.
Good morning.
GM.
So you guys are all in New York. You snowed in. Somehow Zach made it to the office. I can't believe that.
Subways are running.
Yeah. Nah, snowed in. Just looking out the window right now, it's like insane. Complete whiteout.
Zach, you did not adhere to Mayor Mamdani's travel ban, it appears.
If I'm willing to take the risk, I should be allowed to take the risk.
Yeah. All right. Well, this week we're going to talk about the CFTC chairman, Mike Selig, stepping into the legal battle over prediction markets directly, asserting that the CFTC has sole federal jurisdiction over event markets by filing an amicus brief in another case. We're going to talk about that and also talk about what types of rules the CFTC might implement for this nascent market. We're also going to talk about Coinbase announcing that Base, their very prominent centrally sequenced optimistic roll-up on Ethereum, is going to leave the Optimism Superchain and build its own tech stack. Is it to make it more decentralized or merely something else? And we'll also talk about Nakamoto, the Bitcoin treasury company, acquiring BTC Inc. and UTXO Management. Is this a model for DAT 2.0? And finally, we'll talk about, the latest in the AI and AI doomerism, and also did an AI bot really get tricked into sending hundreds of thousands of dollars of a meme coin to a random reply guy? Before we get to that, I need to remind you to please refer to the link to the disclaimer in the show notes, and note that none of the information in this show constitutes investment advice or an offer, recommendation, or solicitation by Galaxy or any of its subsidiaries to buy or sell any securities. Let's kick it right off with the CFTC and prediction markets. Mark, you've been following prediction markets a long time. This is pretty remarkable to see the CFTC chair. He released a video saying that event markets, as he called them, are solely in the CFTC's purview. What was the story?
So, Mike Selig really came out swinging last week, Alex. So there's a number of court cases at the state level where the courts are arguing, not the courts, the state gambling regulators are arguing that these prediction markets, which are regulated by the CFTC, are illegally providing gambling services that should be regulated at the state level. And Mike Selig intervenes in this case in Nevada, where Crypto.com is suing the local gaming regulator, or vice versa, I forget which. But Mike Selig and the CFTC filed a friend of the court brief saying, we, as the federal regulator for Crypto.com, have sole jurisdiction over these markets. Now, again, we're talking about sports betting here, and sports betting is what it is. It's not very interesting to me. No judgments or anything like that, but it's not really what prediction markets are supposed to be about. Although interestingly, CFTC did argue that there is a hedging function for sports. Like if a team has a bad season, that can be bad for businesses that depend on the team. So you could argue that sports betting has some hedging function. But really, if you step back, think about 2 years ago, the previous administration, the CFTC was not very happy about being the regulator for prediction markets. Mike Selig's predecessor, Rostin Benham, didn't even want the CFTC to be allowing election markets. Forget about sports. So this is a real 180. Mike Selig comes out and says prediction markets have positive side effects for society. Like it's really, really aggressive, and a really different tone from what we heard a couple of years ago from this agency.
Yeah, it really is. And he didn't mention in his video sports betting, though, right? He was focused on this sort of higher level topic.
Yeah, which is kind of funny because this particular case is all about sports betting. But he did frame it in sort of very high-minded terms, which is music to the ears of those of us who have been saying for years that prediction markets do indeed have these positive externalities.
Yeah, absolutely. And I think one of the other interesting things is the CFTC, Mike Seelig, has been saying that they will do rulemaking. Not only is it in their jurisdiction, but they intend to write new rules for the prediction markets. What do we think is at the top of that list for rules?
I would think insider trading is either at the top or very, very close to the top, because that is the real hot button issue. I mean, a lot of the news stories regarding prediction markets in the last couple of months have been about possible or suspected cases of insider trading, where someone places a bet that might appear to be contrarian right before the event occurs, and it turns out they were right, and they make a big chunk of money. And sometimes it might very well be an insider. Sometimes it might not. It's hard to tell. But that raises this interesting question of is insider trading really a bug or is it a feature?
On Polymarket with like the no KYC versus the KYC platforms. So that's kind of like an interesting note as well. And I also just a reminder, like over 80% of Kalshi volumes all time are sports, so this is like the vast majority of their platform.
Yeah, it seems like the sports is giving these platforms some runway.
What do we think constitutes insider trading or market manipulation in this context? Because I know we've been debating this. There have been a couple examples. One was these IDF soldiers in the Israeli Defense Force that apparently were arrested for having bet on a market about when Israel will strike Iran by this date. And that was one where they were arrested. There was another one where Brian Armstrong read a bunch of words at the end of his earnings call in the third quarter, I think October 30th or around then, which caused a bunch of the mentioned markets to resolve a certain way, right? Will he say staking so many times? Will he say Bitcoin, et cetera? And then there's this question about like the Super Bowl. There was the guy that ran on the field. Some speculated he might have bet on someone will run on the field, and then he caused it to occur. I couldn't actually find evidence that he had done that bet, but also there was Cardi B be dancing in the halftime show, and supposedly another dancer knew that she would and bet. What constitutes? Let's start first with insider trading, which could be a little different than market manipulation.
Yeah, I mean, the way I've kind of thought about this, and like I don't like actually fully understand like insider trading laws. Like it's a very complicated matter, but the way I've kind of looked at it is like we know what might not be insider trading, and a lot of the stuff on Twitter and some on-chain analysts just purely point to the on-chain data as like a means of proving or disproving insider trading. Like coincidences do exist, and somebody placing a bet like an hour or two before a market just goes vertical and resolves like is not enough to call foul. Like this is a much more convoluted and complicated issue that just can't be purely solved through trading data. Like you need to look at the off-chain stuff as well. And I think prediction markets are just so unique. Like they may have to rewrite insider trading rules to some extent to make those laws like accommodative of them. Like best case scenario, like we're really just pushing the limit of what the law defines and what it covers. And who knows, prediction markets may literally redefine what insider trading laws look like.
Well, let's take it from first principles then, because what should the laws be? What should the rules be? I mean, what is manipulative versus? Because I know, Zach, you've argued that it's a feature, not a bug, that an insider could bet on a prediction market and thereby give information to the market about a real event that the market cares a lot about, and that could be seen as a public good.
Yeah, I mean, the whole purpose of prediction markets is to get like the clearest, most opinionated signal possible on an event. Like that's why they stand to be better than traditional news outlets. Like the regular media is, like I say, like afraid, but like they have like reputational damage if they call something one way and then it ends up going the other. Like we see that with the election every single year. Like I've followed the last 3 elections, and every single one of them have essentially like been 50-50. Like nobody actually took an opinionated stance. But like if you looked at prediction markets, they're like at least like 60-40, 70-30. So like there's an opinionated signal that comes out of them. And when you create rules that aren't accommodative of that, you may just end up getting like distortion or just like outright false signal, and then that kind of defeats the purpose of the market. So like obviously people need to play within the rules, and we can't just have rogue people running around with information that could be destructive and giving it away. Like I think the IDF soldier stuff is kind of indicative of that. Like trade secrets and like national security issues may fall under their own thing, but in general, like the purpose of these markets is to get people who have the information to disseminate it through market prices. So I think just being accommodative of that is very important.
And then like on the manipulating stuff, I think if you have a super clear and obvious ability to resolve the market a certain way, like the Brian Armstrong thing, 100%. You know what I mean? No way he would have said all those words if he didn't know he was resolving the market a certain way. I mean, at the same time, like, you know, surely Brian Armstrong wasn't like making a bunch of money from doing that. Like he doesn't care about the money. He was kind of just like joking around.
Yeah, he was almost certainly not investing in the mention markets.
Yeah,
himself,
and they're not
right?
even like
they weren't.
This
big.
is like a waste of his time to even like try to make money on that. Like maybe he would make like $200 best case. You know what I mean? I don't know how liquid that was, but yeah, I mean, he was just joking around. I don't know if it's like, if there's like some bad intention and you're actually like printing from it, I don't know. That's a kind of a different conversation, you know?
The thing with the mention markets though is like the First Amendment protects your right to speech. And like if it's difficult to kind of prove that like maybe he was aware of the market. Like if he just like looked at it and it was in his head.
It is not difficult to prove. He said a bunch of words that were on the mention market. It was so
but
obvious.
the words were like Bitcoin staking Web3. Those are normal words to say on an earnings call.
Yeah, but he said it kind of randomly.
I understand the argument, but like you know what he was doing. It was like right before the call ended, and he's like, "Hold on 1 second," and then just lists every single word. Like,
yeah, I agree, but like that said, couldn't I then like open a market on what Alex will say, or you could open a market that says Alex will say these words, and then now because you created the market, I no longer can say those words? Like, that seems like an unnecessarily high burden on my First Amendment right.
It's a very complicated and complex issue.
Yeah, and you could also like act like you didn't know and like say all the words on accident, you know, like and be kind of like nonchalant about it.
Or yeah, it's not possible to prove. I mean, obviously, if you subpoena Brian's like search history and he's looking at the poly market while he does the thing, you might be able to show that he was aware of it, right? But it does seem like that's a really niche example, but I think because it's mention markets, which are themselves niche, and like the question of like a mention market on a person, can they then be prohibited from saying it if they're aware that saying it would resolve a certain way, is still pretty niche. I think it's interesting, but I think you said intent, Will, intention, and I feel like this goes to an important point. Like, it's one thing to be aware of it. It's another to do it for the purpose of manipulating the market. And then I think the IDF one, let's talk about that one as an example as well, because these are two soldiers, ostensibly not the generals who decided when to attack Iran. So they're not in a position to resolve the market in their favor. They merely maybe had information about a forthcoming strike. So in that sense, it might be considered a misuse of their classified information between them and their employer, in this case, the Israeli government, which makes sense. Like, I'm a soldier. They say you're not allowed to do anything with this information. Now they'll probably add an asterisk, including bet on prediction markets. I'm in violation with my employer, but did they actually manipulate the market or merely bet as an informed participant when they aren't? It's a lot different than Brian has the sole capability of resolving the market to yes, or if you had bet on yourself, someone running on the field, and then you run on the field. I feel like that's different than what the IDF soldiers did, which was possibly mishandling of classified information, but not quite market manipulation in the same way.
Yeah, I mean, did they move the market when they placed those bets?
Do we even know? Can we get historical poly market? I was looking to see if I could find because that market expired. It was like, they'll attack by Iran by like January 13th or something. But that's also a good question. If they did move the market, is that similar to leaking the information?
It is absolutely leaking the information, and leaking it in a very credible way because they're putting money on the line. And one might argue that that's why these markets exist in the first place. They're in this sense they're betraying their country, and they're betraying their government, and they're betraying their command when they do that. But they are conveying salient information to the rest of the world, which is ultimately what these markets are about. So in that sense, yeah, sure, it's insider trading, but I don't think it's manipulation because they were conveying real information. Robin Hanson, who is the kind of godfather of modern prediction markets, has this great way of framing the idea, is that there's two kinds of participants in the markets. You have wolves and you have sheep. A wolf is someone who makes a trade because they have good information. Now, that good information could be insider information, like in this case, or it could be simply that they've done a lot of research and they are very knowledgeable about the topic and they can make a very educated guess. And then the sheep are people who trade for any other reason, right? Like people who try to manipulate the market to create false impressions of probability are sheep because they provide liquidity for the smart people to trade against. So I think that's a very helpful way to think about it. So in this case, the Israeli soldiers are wolves, and they are misusing the information from the perspective of their employer or their country or their government, but it does convey a useful signal to the rest of the world.
It's a tricky one. That's why I think most likely, you have some market manipulation and insider trading rules as it relates to commodity derivatives at the CFTC. And of course, you have them in the context of securities, but really these are quite different. So I think maybe they'll try to use some of the frameworks at the CFTC that exist for derivatives and commodity manipulation rules. But it does seem like they got to start sort of from first principles here. Because there is a lot to weigh, even in the case of the IDF, to the extent that it's what I'm hearing from you guys is that it does not negatively impact the market integrity of the prediction market. In fact, it may even enhance it, but it is also clearly a misuse of classified information. So that feels to me less like a CFTC thing to capture and more like, the IDF's having a beef with these soldiers. And they have actually come out. I saw the IDF said that this was not a case of malicious intent in the sense of leaking information, but merely one of personal enrichment. And so they do, I think, right, because it's not like, just to be clear, it's not like they sent the date to Hamas or to Iran, right? They bet on it. They didn't actually give the information to somebody.
But I don't know. They're tipping their hand. They're tipping a hand when they do that.
Yeah.
So I think
true, but it doesn't fit neatly in the category of giving information to the enemy, though. It's something different.
Yeah, and it also becomes a question of like, how much do you need to move the odds in order to like actually sway people's like view of it? Like, what is the threshold of that? Is it like
what if they had bet?
Like,
what if they had bet and made money because it resolved in their favor, but they didn't actually move the market? Then would it be considered conveying the information?
Like, how much do you need to move it by in order to actually sway people's opinion? Like, maybe like a 50% move is like significant, but if you only move it like 150 basis points, like,
yeah, in that case, was it tipping the market? These types of things are tricky. I do think it's pretty reasonable that if you're in a position to resolve the market in your favor, you take a position and then you manipulate the market with the intent to resolve it a certain way. So something like that has to become the standard, right? I mean, but I wonder, to me, being in a position to manipulate the market outcome in your favor to me is the clear definition of market manipulation. Whereas if you merely know something and you bet, that's murkier, is how I would describe it. Anyway, interesting times. You think that'll be at the top of Selig's agenda there at the CFTC for prediction markets. And I'll just point out, Mike Selig was the general counsel for the crypto task force at the SEC directly prior to being appointed to the CFTC. So a good friend and of crypto being integrated more responsibly into the financial system, but also very knowledgeable on the topic. So quite fascinating to see him step out on this that early. All right, let's move on. Zach, you wrote about Base is leaving the Superchain for its own tech stack. We've been critical of Base's centralization generally, but also particularly in the context of tokenized securities. The question being, is a centralized sequencer decentralized enough to, in the case that you're creating securities markets on that platform, to avoid registration with the SEC? Also, just other stuff, that we pointed out last summer, they were paying more in fees to the Optimism collective. Is that what it's called?
Yeah, the Superchain.
The Superchain, then they're actually paying in fees to post data to Ethereum, and questioned the Ethereum alignment of that setup. It didn't seem like they mentioned a lot of that. What did they mention, and what are they doing, and what's the justification for it?
Yeah, I mean, the primary justification was to just make iterating on the tech stack more nimble. Like, they had built up a lot of external dependencies, and the chain's technology could only move as fast as those external parties allowed it to move. So the main justification was that they want to control the tech stack from top to bottom. They want to be able to control shipping cadence and feature changes, and kind of left it open-ended to this is a minor thing now, and then there may be some more change in the future. But that's kind of what we were thinking in terms of securities trading and all that. Do they want to be able to add features around KYC and privacy and all those things without having to go tap on Optimism and wait on their developers and whatever their processes are for getting that implemented? But yeah, it kind of comes at a weird time with Clarity moving through Congress, Vitalik's blog post on the future of L2s, which I don't really think this is related to. L2s are still going to be needed. He just kind of mentioned that they weren't necessarily needed for scaling, but specialized block space is still important. And then, yeah, it's kind of interesting. It was very sparse for information. They didn't mention what was going to happen with the OP super chain fees. And that's also happening as Optimism is working through a governance proposal on buybacks with revenue. Base is a substantial amount of that. So I think the future is very uncertain for Optimism in that regard.
Some have worried that Section 302 of the Clarity Act, which defines what a non-decentralized finance trading protocol would be, could capture something like Base. It could be determined to be non-decentralized. And the implication, of course, in Clarity would then be that it is not able to take advantage of the various exemptions from regulation that a truly decentralized one could be. They didn't mention this at all, right? It sounds like they're just saying there's more features we want to add. So they're saying we're going to add a lot more features and we have to do this in order to do that. It's basically...
Yeah, they just want to limit complexity, reduce the number of cooks in the kitchen, and make the chain more nimble.
That even, if they don't change the structure, doesn't that make it even more centralized?
What do you mean by that?
Well, I mean, at least with the super chain, they've got a diverse ecosystem of developers contributing changes to it.
Yeah, I mean, they left it
now the
open
developer ecosystem is definitively more centralized. No.
Yeah, they left it open. It's still fully open source, and they even put in parentheses open source forever. They don't plan on taking a closed source. Anybody can come in and build clients and whatever they want on top of the chain.
But can they submit pull requests to change Base? Do we know?
I'm not 100% sure. Yeah, it's an interesting one because also Inc, which is Kraken's L2, they moved to decentralize a few months ago. We covered this. They were experimenting with a based rollup design, which is essentially getting rid of the centralized sequencer and adopting the Ethereum validator set for sequencing. So you're as decentralized as the L1 in this case. So yeah, it's all kind of an interesting move. A lot to speculate on and not a whole lot of hard details.
I mean, what do you guys think Base should do in general? Like, I feel like, Jesse gets all this constant hate. Like, there's all this kind of turmoil, like, surrounding Base. And, like, I mean, clearly they kind of fumbled with Zora. Like, wearing my Zora hat right now. But I don't know. I mean, it's interesting,
There are
right?
literally
Like,
dozens of you, Will. With that hat.
yeah, literally, like, yeah. I mean, I don't know. What do you guys think in general? It's just kind of like funny to just be like an observer.
I mean, it's the most important Ethereum L2 by volume, and so it matters what they
Yeah.
do.
I will say Blackbird is one of my favorite crypto apps, like the crypto restaurant app for New York City, and I believe they're like built on top of Base. So that's sick.
Yeah, I mean, like, to be clear, like, Base is not going anywhere. Like, this isn't
Right.
like a Base is like disappearing thing. Like, it will remain a roll up for
I was
now, at
more
least. And
asking, like, do you think it's the right move? Like, what do you think?
when we think about like what the future might entail in terms of like tokenization and bringing like real world assets on chain and all the requirements they have, that I feel like that's like the most likely path here. Like, they could have continued business as usual for the crypto natives and crypto native assets. I mean, obviously decentralization is important, but like end users have proven to not really care much about that because people have been using these centralized L2s for what, close to 4 years now. So from my view, it seems like more of a move in the direction of the stuff Alex has been covering. Like, they want to be able to implement privacy features, remain compliant for whatever rules may come down the gauntlet of clarity. That seems like the most likely scenario.
It was reported that during the World Economic Forum in Davos, Brian Moynihan, the CEO of Bank of America, had told Brian, like, stop trying to be a bank. Brian Armstrong, stop trying to be a bank without being a bank. Just be an effing bank, was apparently the quote. And this is kind of like, if they don't, they have an interest in being a securities exchange or, a protocol upon which securities trading occurs, right? Without registering as one. And I really don't believe they can do that as a centralized sequencer. Like, because you get safety guarantees like unilateral exit from that, but in the context of securities laws and rules, the sequencer can set arbitrary fees, they can reorder your transactions, and they can censor your transactions even if you can later replay it. And all of that is highly regulated activity in the context of security. So that's why I think they have to try to decentralize this in some way. It's why we were, very promotional and congratulatory about Kraken's efforts to make theirs more decentralized. So I have to think that that's coming, that it's true they're just bringing their tech stack in-house for now, but presumably some offering may occur. And then, by the way, if they do some change in the offering may occur. And by the way, if they do a token also under clarity, pretty sure if you have only one sequencer ordering the transactions, effectively one validator in the L1 lingo, you're not going to be able to sell that token very widely to the public. Most of the rules around token issuance set various types of thresholds in terms of concentration of ownership and control. So I think they've got to decentralize, and I have to imagine that's their plan in some way. I don't know if that looks like an L1 or like a more widely permission validator set, but still pretty wide, like a Canton or something like that. Or maybe like a base rollup or something. But to me, that has to be somewhere on their roadmap based on just what we've seen them working on.
Alex, you're arguing that they need to be credibly neutral to become a host for tokenized RWAs?
If they want to avoid registering with the SEC.
Right.
Because the joke has been like, I've said that Base isn't short for Coinbase. It's short for a computer in Coinbase's basement. Mm-hmm. And like NASDAQ has a computer in a basement and that does all their order matching and settlement of trades, and it's regulated, right? So like, presumably if they want to be a bank without being a bank in this context, they would have to be more decentralized. There's nothing stopping them from trying to register Base if they don't want to decentralize, but I think they very much do not want to be and do not think and I think maybe rightly so, they do not think the protocol layer upon which certain types of activity happens should itself have to register. I just think to make that case is a lot easier for Ethereum or Solana or Bitcoin than it is for a sequencer run by one corporate company, in a closed box.
And I'll also add that, like, their explicitly mentioned rationale also makes a ton of sense, especially with how AI has progressed in terms of being able to write code and stuff. Like, you want to be able to update your code base with as few developers as possible, like anytime you want. And if you're relying on a bunch of external parties who you can't really manipulate their code or implement it in the way you want to, like, there's obviously limitations to that. But it also raises the question of, like, all of the corporates that are coming on chain now, like either launching on like Solana, ETH, or even some of the like quote corpo chains. Like, are they just doing this to get to market fast in the same way Coinbase used the OP stack? And then 3 years from now, they're just going to jump ship and build their own chains when they reach like some kind of market capacity or adoption level. Like, I think that's also something to consider out of this whole thing too. They just essentially used the out of the box OP stack infrastructure to launch their chain, and then once they realized, like, oh, we're like big enough and can do things with this, like, we'll bring all the development in house.
Yeah, I think that could be the simplest answer, but I just foresee in the future more to come on the design, on the type of design. But I agree. It actually, even if nothing that I'm saying is remotely true about their possibility of wanting to re-architect the entire setup, it still seems like, I mean, they have a lot of resources, right? Like, they have a lot of people working at base that can work on this thing, and they're constrained, I guess, from making protocol updates.
Yeah, they want to double the fork cadence from 3 a year to 6 a year, make them smaller, more pointed updates. And then that's like essentially the extent to which they mentioned that. But they also wanted seemingly to be more Ethereum aligned and kind of follow the roadmap of the L1 a bit closer, which I also found to be interesting because there is this big push recently to bring people back to the L1. Let's scale the L1. Vitalik has been publishing a lot of think pieces on Twitter recently. So yeah, there's also some confluence there.
All right, moving on. In other news, Nakamoto, the Bitcoin treasury company, Naka, is buying. I think they have now closed the acquisition of BTC Inc. and UTXO Management in a transaction valued at $107 million in stock, Naka stock. BTC Inc., the prominent owner of Bitcoin Magazine and the Bitcoin Conference, UTXO Management, a hedge fund, Bitcoin-focused hedge fund. Will, you wrote about this, and you previously worked at UTXO. What does this mean? You've also covered DATs for us extensively. So, I mean, what is the story here, and some context maybe on why does it matter?
I mean, it's pretty sick. Like, when I wrote about it, they were, I believe, like, they hadn't completed the acquisition. I think I saw, just a few days ago that they've completed the acquisition. So I mean, you have Bitcoin Inc., right, which is pretty much like the leading Bitcoin media company, like, by far, right? So they run all the conferences. Everybody remembers when Trump spoke at the Bitcoin conference in Nashville. Like, that was kind of this huge moment. It's like, oh my, like, this guy that might become our president is literally talking about, embracing crypto. Everyone was like so bullish. It honestly didn't even feel like real life. And then, they also run like Bitcoin Magazine. They've been instrumental in kind of campaigning and like bringing all of these important speakers to, speaking about Bitcoin pretty much. And then you also have UTXO Management, right? Kind of Bitcoin focused hedge fund, very successful, very, very cracked team. I do understand, like, Naka stock is down pretty insane from all-time highs. And so you have like all these people on Twitter who are kind of just raging, like, no matter what the tweet is, it doesn't even matter how bullish the announcement is, like, they will, no matter what, be in the replies raging, right? Because they bought the stock at like $20 or whatever, and they're just like down infinite. But yeah, I mean, something we've wrote about just kind of for a while now at Galaxy Research is really just like this pure kind of like buy Bitcoin and hope MNAV expands model is like completely shattered, right? I mean, we have all these crypto assets are just down crazy from all-time highs as well. But yeah, Nakamoto, so adding kind of like this kind of revenue that's like not reliant on pure Bitcoin price appreciation. Definitely interesting. So something I'm writing about right now is kind of like this DAT 2.0 model. Like what should happen next with DATs? Like what do they need to do in order to continue to survive? And I'm kind of looking more at like proof of stake DATs. So like, you know, different MEV strategies. Like these are things that you can't really do with like a Bitcoin only DAT. But yeah, I mean, we're gonna see what happens. Like, you know, other treasury companies likely to follow if this does end up like panning out. But yeah, I mean, we'll see. Oh, I guess I should also say like they are facing kind of like a delisting risk, depending on what happens with the stock. So that's something to keep in mind as well.
To me, it always felt like, you know, one of the interesting things about this tie-up would be that, right, it was at the Bitcoin conference in Nashville in 2024 that now President Trump gave this famous Bitcoin speech where he declared that America would become a Bitcoin superpower and the crypto capital of the world, that, you know, aligning a business like BTC Inc. that is solely focused on expanding what they call hyper Bitcoinization, you know, play on the word hyperinflation, with a Bitcoin ownership vehicle, like is interesting. And I don't know if we'll see, you know, it's kind of like the Bitcoin DATs are sort of divided now in those pursuing this digital credit to create digital money, which is like MSTR, and now Strive and I think MetaPlanet are doing similar things, sort of expanding and enhancing their offerings that they can use to acquire more Bitcoin, versus some of the others that are, you know, focused on adding businesses, revenue generating businesses. So I don't know if that's maybe we're bifurcating into two models now.
Yeah, I guess one last thing I should say is people online were kind of acting like this was some surprise announcement. Like they had no clue that Nakamoto was going to like acquire Bitcoin Inc. and UTXO. Like that's not true at all. You know, they have been talking about for a while now how like this has been their plan. So, you know, that's also like something people need to realize.
All right, let's wrap it up with a discussion about what has been happening in AI. There's been a lot of so many of these. It's like every day you wake up and there's a doomerism article on X. There was that one by Citrini 7 Capital. It was like a satirical market update from 2028 in the fall, where they were like, we haven't hit all-time highs. It's been 2 years since we hit all-time highs in the stock market. Unemployment is 10% and rising. And there's a huge dislocation between capital and labor, sort of enunciating like a very common like bear or doomer post idea about the rise of AI. Then there was also this dev who has an OpenClaw agent that was holding a bunch of coins, Lobster, a meme coin that's, what is that, OpenClaw like themed coin?
Yeah. Exactly.
Yeah, and then gave a normal reply guy, you know, mi famiglia, my such and such has
my
a
uncle
whatever
my uncle
disease.
has a tetanus infection.
Is that what it was?
Yeah, my uncle has a tetanus infection, and I need 4 SOL. And then
that has to be, by the way, tetanus infection. Nobody's going asking for 4 SOL. That alone is probably a bot as well, right?
Well,
but anyway,
think
hold
on.
But the Lobster bot sent hundreds of thousands of dollars to the reply guy's address.
So what happened is like this token ripped, right? I think it's around, you know, 7 mil market cap or something like that. And then this was yesterday morning, so like February 22nd morning. There's all these reply guys, right? Like this is not just kind of some random thing. Like there's always people in crypto replies that are like, please sir, like I need 0.2 SOL, like I will lock in, it will save my family, you know. And so he asked for 4 SOL, right? And then the agent sends his entire token supply. I believe he had 5% of the supply, like 50 million tokens, which were worth, yeah. And the market cap was very high. So the tokens were worth like $250,000 or something like that. And then the guy literally one clip sells all of the tokens, gets hit with insane slippage. I think he ends up only getting like $40,000 or $50,000 in Solana just because of how bad the slippage was. Because you can't like, that's a lot of tokens to sell in one transaction. But it's just, it's just so awesome. Like, this is like the perfect thing for like Lucas, like he's in China right now. Like, he is hype right now. Like, this is like exactly what he wants to see. Yeah, so he nuked the chart. It went below 1 mil market cap for just a little bit, and then it got all this traction, and now I believe it's back up. Last time I checked, it was like 11 mil this morning. So the token recovered. It's just really interesting to see. I know you guys are very skeptical of like what happened with it, but he released this blog post on Substack, the developer of the project. It's just, this is just like so entertaining, like regardless of what you think about it. Like, and then the agent goes on and is like, I am hiring for a bunch of jobs, like I want to hire people to do tasks for me. So like, reply where you're based and I'll give you a task. And then all these people are in his replies like, I'm based in DC, like give me a task. He's like, go into this library, do this thing. He sends them like 5 SOL for doing it or whatever. It's just sick, like I don't know.
It's like a scavenger hunt.
What is the skepticism?
Well,
Zach,
you guys
wait, Zach, what is the skepticism?
The skepticism is the guy who created the agent itself, and the person who received the $350,000 or $250,000 are all the same person. Like, there's
kind of like
nothing
a moat book scenario.
Yeah, like there's like,
why not just choose to be optimistic?
I am optimistic in the sense that like it's cool to see people experimenting with this stuff. There's a meaningful shift from the previous AI cycle to this one where people are actually like, let's give these things money and figure out how to make them do actions and stuff, which was mostly absent from the previous AI cycle. But again, we need to kind of remember what we're working with here. Like, people are making hundreds of thousands of dollars overnight and need to play the game to keep it going. Like, not accusing anybody of anything, because at the end of the day, like, it's not proven one way or another. Like, no one knows. There's just like a few things I find funny. Like, one, you said it ripped, but it only went to 7 million market cap. Like, very indicative of the state of the trenches at the moment. Like, this is probably like $100 million to $200 million deal a year or two ago. And two, like, we've gotten to a point with AI, like, they're literally writing like doomer fan fiction, like Citrini, like Nick Carter talking about quantum and writing like a fictional story. Like, it's like very cool and creative, but it's just it's pretty incredible to see how we shifted from this optimistic view of AI of like, it's going to enable us to build so many things, like it's going to be great, to like, it's actually going to take all of our jobs and ruin us. Like, I can't really help but think that like external anxieties about like the world and markets are kind of creeping into people's view of this stuff. And I think, like you said, like remaining optimistic on it is the correct path. But yeah, at the moment, people are just like super doom and gloom about it.
Yeah, no, for sure. One other thing I'll say is like, he didn't necessarily need to, sell. Like, if he wanted to actually make as much money as possible, he wouldn't have sold 5% of the token supply for $40,000 and face all that slippage. Like, that was not the best way to make money. And at the same time, the token deployer gets creator fees, right? Because that's this like meme coin launchpad model. So when there's all this volume on your token, you're getting a lot of money without having to sell any of the supply. Like, the best way to profit here would have been to like clip out in small cells, right? Like, one clipping, it shows that the reply guy or whatever did not have was not intelligent, you know, like he did not understand how to optimize the like extraction or whatever, you know what I mean?
I mean, I guess that's fair. He also
And this
nuked
guy's
it.
very intelligent. This is like an insanely high IQ like AI developer.
He also nuked the market cap, like what you said, below 2 million, and could
Yeah,
have
below
just
1 mil
insta
for a
bought it
little bit.
all back. Like, and if the coin rebounded, like,
Yeah, I know there are a lot of
there's like a lot
different-
of like
yeah.
ways and like speculation.
He could also have
but
just wanted to see the world burn and collect the X like monetization as well,
And-
right? I mean,
Yeah. And you also could argue that like he knew that nuking it would drive engagement, which would then drive volume and get more creator fees, you know.
maybe. Yeah. It's a strange one, and it does feel like, though, separately, if it is true, because I mean, come on, your dad's got tetanus, and you need 4 soul. Like, I feel like those types of replies, again, if we assume that this one or any others like it, those are bots too, right? Like, those are like, you know, you message 100,000 people asking them for 0.1 BTC, and like if you land even one, it's profitable, right? So like,
Yeah.
there might be a future business in just purely trying to ask AI for coins.
Some of my friends that are like, you know, spending a lot of time like scrolling TikTok or scrolling Instagram or whatever, I was like, bro, pivot to trying to trick AI agents on Twitter into sending you crypto. Like this is, you know, this is not a bad idea.
But we went through an entire meta of this like a year and a half or so ago, where it was like essentially like a test of the AI. Like it holds a bunch of coins and everybody has to come in and try to inject the correct prompt to extract the money. Like we kind of went through a version of this already where that was the sole game. So like it's not really anything new. I guess it just kind of gets like commercialized when we have tens of thousands of agents running around with crypto and not just like isolated cases. But still, I think this is a good and positive development. Like people are thinking in terms of like how do we enable them to do things, and also like how do we prove that blockchains may or may not be a good settlement layer for agents. I tend to think it's positive. So
all right, well, let's wrap it up here. It's a great one, guys. What are you looking at this week in particular? I'll start with you, Mark.
This week, I'm curious to see what the continued reaction is on the prediction market moves that Mike Selig's been making. See what the fallout is from that.
yeah, I'm still keeping up with the Aave DAO versus Labs drama last week. We had or maybe it was like late the week prior, Labs announced that they'll just give 100% of revenue to the DAO, like minus like some kind of expenses. The DAO like demanded more clarity. But later last week, BDG Labs, like one of the main dev shops that I think is led by the former CTO of Aave, announced that they're done contributing to the protocol. So continued drama there, but I think it's net positive in terms of like building better tokens and DAO structures that are conducive to tokens and token holders.
Yeah, I mean, whenever I kind of like get into researching a certain thing, I like make myself more bullish on it just by researching it. So like I'm kind of finishing up my research piece on social trading and FOMO, which is kind of, you know, this super sick mobile app for like social trading. And all of these different like viral meme plays, like people always talk about, oh, how do we onboard normies into crypto? I think this really is the best way. You know, like you see all these kind of like P&Ls on Twitter. It's like, oh, if he can hit a 100x, why can't I? And then they have this clean like Apple Pay onboarding. So it's super easy for non-crypto people to download the app, Apple Pay, have funds, you know, follow your friends. It's like legitimately fun, right? Like it's very relevant because I kind of like punch this monkey, right? That the orphan monkey that everyone's talking about. Like I literally talked about this monkey and the crypto implications, right? The Solana meme coin with my parents who like don't even like crypto. But because of the kind of like social trading aspect, right?
Your parents
yeah.
must be so proud, Will.
No, yeah. I mean, it's funny because I was like, yeah, I'm not gonna trade this because I think I'm late. Like, I think it's too viral. And my mom's like, my mom's like, yep, like I already saw it. You're probably too late. And it's like, dude, like that's funny,
That's
right?
great. That is funny.
But yeah, I mean, that's what I'm watching. Like all these
Cool.
kind of viral plays are exactly what's going to continue to drive volume.
How about you, Alex? What are you looking at this week?
Yeah, maybe there's some movement on clarity that could happen. We've been waiting and hearing positive things, but haven't seen anything materialize in public yet. So I won't beleaguer the call here now with clarity discussion because we've talked about it ad nauseum, but could be some movement this week or next week if you believe the White House's so-called deadline, which I think is next Monday. That would portend some movement by the two intransigent sides between the stablecoin yield issue. So that could be interesting if it happens. Good news. I think if it doesn't happen, not that big of bad news, but nonetheless worth paying attention to. That's it. That's it for this week of GLXY Grid. If you're in the Northeast corridor, good luck shoveling, and hope everyone stays safe. Thank you to Mark Hochstein, Zach Picorni, and Will Owens. I'm Alex Thorne, and we will see you next week.